Hello, welcome to this video on VAT or value added tax for the SQE. VAT is one of the easier taxes to understand for the SQE, and it's relevant to multiple SQE topics, including business law, property practice, and solicitor's accounts. This video will provide an overview of VAT for business law purposes. Let's begin by looking at when VAT applies. VAT should be charged on any supply of goods or services made in the United Kingdom, where it is a taxable supply made by a taxable person in the course of furtherance of any business carried on by him. That is set out in Section 4, subsection 1 of the VAT Act 1994. Let's explore the individual parts of that definition to understand when VAT applies. Firstly, the supply of goods and services. A simple example of a supply of goods would be the sale of a mobile phone. And a simple example of the supply of services would be the provision of legal advice. We then have taxable supply. Some supplies of goods and services are exempt from VAT, and an example of this is most insurance policies. Next we have taxable person. Not every person or business needs to register for VAT. If the value of taxable supplies over a rolling 12-month period exceeds £90,000, then the person or business must register for VAT and will need to charge this on their supplies. If the value of taxable supplies over a rolling 12-month period stays below £90,000, then a person or business might be able to voluntarily register for VAT. They might register so that they can get a refund on the excess VAT that they've paid. Business includes any trade, profession, or vocation. Included in this definition would be the incidental costs of business. For example, a law firm might need to charge VAT on the sale of its old chairs. Let's now look at an example of when VAT would apply. Simon orders a mobile phone for £200 from a large appliance store that is registered for VAT. The mobile phone is a standard rated supply, and the supply takes place in the United Kingdom. Has there been a supply of goods? Yes. The mobile phone. Has a supply of goods taken place in the United Kingdom? Yes. Was there a taxable supply? Yes, the mobile phone was a standard rated supply. Was the supply of goods by a taxable person? Yes, the large appliance store was registered for VAT. Was the mobile phone provided in the course of business? Yes, the large appliance store sold the mobile phone in the course of its business. It's important to note that if the phone was sold for £200, then this would be held to include the VAT cost, unless it was advertised as being sold exclusive of VAT. This is important from a professional conduct perspective and also for SQE2, such as in the interviewing assessment, in which you might be asked to advise a client at the start of the interview session on how much that interview is going to cost. Let's look at the consequences if a solicitor fails to express that a bill is exclusive of VAT. If a solicitor had billed a client £200 and this is the charge they expect to recuperate from the client, they'll need to state that the bill is £200 excluding VAT. This would mean that the client would pay £240, as £200 is paid for the bill, and VAT would be charged on top of that at 20%, which would add £40 to the bill, bringing the total for the client to pay to £240. If a solicitor chose to include the VAT in that £200 amount, or they forgot to state that it was exclusive of VAT, then the VAT will be automatically included within that £200, and the client can't be charged a VAT balance further to that. So if a client had been billed £200 and it hadn't been stated that this was exclusive of VAT, the solicitor would only be due from that £200 £166.67, with £33.33 of that 200 being chargeable to VAT. 166.67 plus 33.33 makes £200, and 33.33 is 20% of 166.67. So we can see how the solicitor's profits would be affected if they had failed to state that a bill is exclusive of VAT. Next, we're going to look at the different VAT rates. The example I just went through made use of the standard rate of VAT, which is 20%, but there are other rates to be aware of too. The standard rate of VAT is 20%, and this is the rate that applies to most supplies of goods and services. The reduced rate of VAT is 5% and applies only to certain goods and services. An example is domestic gas and electric. The zero rate means that VAT is payable but at a rate of 0%. An example of a zero-rated product is books. The exempt rate means that VAT does not apply to that supply. An example of an exempt supply is most insurance. Both zero rate and exempt rate supplies involve no payment of VAT, but the significance of the difference between them is that for the zero rate, a business supplying the goods can recover its VAT, even if the purchaser did not pay any VAT themselves. Whereas for an exempt supply, the supplying business would need to pay the VAT and would not be able to recover this from the purchaser or HMRC. It can help here to look at how the VAT system works. VAT can be viewed as a final consumer tax because the businesses that pay this along a supply chain usually do not take any of the burden of this tax themselves. Let's look at a typical supply chain scenario. Assume that all businesses are registered for VAT purposes. Business A produces material for £100 exclusive of VAT, which it sells to Business B. The material is a standard rated product, so Business A pays an extra 20% for VAT, paying £120 for the material. Assuming Business A has no VAT input tax to recover, this £20 will then be paid to HMRC. Business B then produces a standard rated product from the material and sells this product to consumer A for £200 exclusive of VAT, so the consumer pays an extra 20% for VAT and pays a total of £240. The way VAT usually works is that Business A and Business B will not actually take the burden of paying the VAT. It is only consumer A who actually pays it. Business A has not paid any VAT in this example. It has only charged it to Business B. Business B has paid VAT of £20, but when it is paid VAT of £40 by the consumer, it keeps £20 of this for its own VAT costs that it paid when it bought the material and pays only the difference to HMRC. This means that Business B has not taken any of the burden of the VAT, as it has recovered the £20 that it paid from the consumer. It is only the consumer that takes the burden of the VAT. Let's change the facts of this scenario to identify why the distinction between zero rate and exempt supplies is so important. If Business B's product was zero rated, the consumer will purchase the product for £200, but not actually pay any VAT, as it is charged at 0%. However, Business B will be able to get a refund from HMRC for the VAT it paid on its supplies, since it has not been able to recover this from the consumer. Remember, VAT can be viewed as a consumer tax, not a tax on businesses, so the refund system enables businesses to avoid paying tax. If Business B's product was exempt, however, the consumer will still purchase a product for £200, but Business B will be treated essentially as an end consumer because it has not made any taxable supply that is linked to the material that it bought. The effect of this is that Business B will take the burden of the VAT paid on its supply and will not be able to recover from HMRC the VAT that it paid. The equation for calculating the VAT payable is really simple. VAT payable equals output tax minus input tax. Input tax is the VAT that the business pays on its supplies coming into the business. Output tax is the VAT that the business charges on its supplies going out of the business. Let's use this equation in the context of the example that we just looked at. In the example we looked at previously, Business B charged output tax of £40 and it paid input tax of £20. The VAT payable to HMRC equals the output tax minus the input tax. So the VAT payable to HMRC equals £40 minus £20, which equals £20. If the input tax was more than the output tax, the business might be due a refund from HMRC. The SRA's pre-tested sample questions show that calculating the VAT payable is a topic that has been tested in the past. When this video is finished, try using what you've learned from this video to have a go at question 72 of the SRA's pre-tested sample questions, which I've linked below. To wrap up, this video has provided a summary of VAT for SQE business law. But as I mentioned at the start of the video, VAT is explored in detail in other SQE subjects too, such as in property practice, looking at how VAT is charged on different types of property transactions, and in solicitors' accounts, such as looking at how VAT charges are recorded in a firm's accounts. Let me know in the comments if you'd like me to make a video on these other parts of VAT, or if there are any other topics you'd like me to make a video on too. Please also consider liking and subscribing if you found this video useful. Until the next video, best of luck with your preparations.